You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's November 2nd, 2021. Well, you, like me, always looking for new ways to bring in more money, more revenue. You do it by investing, trading, etc. As long as it's safe, you're probably interested. And got somebody coming back on the show, hasn't been on in a couple of years. His name's Adam Mesh. Adam, you are a trader and looking at options. You recently sold your company, and the name of the new company is wealthpop.com. And, well, hey, we're thrilled to have you back on the show. So tell us what you've been doing with yourself.
Thanks, Kerry. And Wealth Pop is a part of Financial Answers now, which is a part of Tiffin, which has some big names involved with it, which is cool. But, you know, I'm doing what I always done. And they asked me when they bought my company, what do you want to do? And I said, same thing I've always done, like you do. I speak to people about trading. That's what I love to do. I talk about trading, I trade, and that's it. I don't want to do anything else.
Mm-hmm. All right. Well, so what's the secret to making money trading?
My focus is always on the long game, so I never want to do anything that's going to get me burnt out quick. What I've been a fan of for the last 7 years, just to go back a little bit, I started as a day trader in the 90s when day trading was the way to go, but day trading was fractions, not decimals then. There were no computer algorithms. It was a different kind of game, and it was great. And as it evolved, I evolved. So I went from day trading to swing trading. In 2014, I got into options. And over the last couple of years, I really like having premium collection as a component of my trading. So
can you tell us what premium collection is, please?
Sure. So when people think of options, they think about buying calls or buying puts. But you could also take the other side of those trades. You could sell calls or sell puts. And it's a great way to lower your risk, oftentimes increase your reward, and always lower your cost basis. So there's a couple things that you could do with it. One is, now's a great example. The market, as we're speaking, is at all-time highs, right? So how good can you feel buying into a market that's the highest it's ever been? Clearly you missed out on something, right? So rather than buying the top, alternatively, if you think we're going to continue to go higher, but we could have some pullbacks, a great example would be you could sell a put. And if you sell a put, it means you're willing to take ownership of a stock at a lower price. So are there any stocks you follow that you're interested in that you think have gone up a lot?
Yeah, like maybe a small company called Tesla.
Right. So Tesla, I was just talking about that yesterday. So Tesla right now is trading at 1164. And let's say you were like, oh, I knew when it crossed 1,000, it was going to be good. I wish I would have bought it then. So you could go out, we're in November, and you could sell the 1,000 put in Tesla. Let's say you were willing to buy 100 shares of Tesla at 1,000, which is 163 points lower than it is right now. Okay. So you could sell the 1,000 put for December 17th for around $43. It's actually $43.35. So you would take in $4,335. And as long as Tesla stayed above 1,000 by December 17th, you make $4,300. So it's like on a fight. You're not betting for a fighter to knock someone out or even win. You're just betting for that fighter not to get knocked out. So in Tesla's case, you don't care if it goes up, stays the same. You just don't want it to go down more than 164 points. And if you were willing to own it, you would own it at 1,000 less than 43. So it'd be like 950 something. So it's a great vehicle for kind of getting involved after you feel like you've missed out on a trade.
Okay. So, but if I'm just selling this put, then my potential loss is kind of unlimited here, isn't it?
So there's a couple of ways. The way I do it with all my services is we do a credit spread. So you're right. That was for investors who were looking to take ownership of Tesla at a lower price. It's the same way if you bought the stock, your risk is unlimited. If you sell a put, your risk goes to zero, right? The one thing we never do, we never sell calls naked, because that's how you get into the GameStop and AMC scenarios, the nightmare short squeezes. So we're never selling calls. If you sell a put, it's the same thing as if you were willing to buy 100 shares of Tesla. But let's say you only wanted to do it for the purposes of premium collection and not ownership. Then what you could do is you could sell the 1,000 put, you could buy the 950 put, and now you collect $10.85 credit, but your risk is limited to the spread minus the premium collected. So on that sense, you'd be risking $3,900 to make $1,100. So you're making over 25% on your money. There's an 85% chance of profit, and your risk is now defined. So when we do it, we do it as credit spreads, because what you just said is something that comes up really common. People don't like to see that big number of risk associated with the credit collection. So you add that other leg for insurance as protection, and that's what's a credit spread.
Okay, what about covered calls and such? Do you ever do that?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper-Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Sure. So covered calls is something I do, but with my audience, it's not as popular because I've kind of just transcended into a more option-based audience. People are really a fan of options right now for the people that are managing their own accounts. So instead of a covered call, we would do a diagonal calendar, which is a synthetic covered call. So let's just take like eBay, for example. eBay's trading at around 74.65 right now. So a synthetic cover call, we could go out to January 21st next year, and we would go at the money. We'd buy a 75 call for around 365, and that's at the money. So right there, our risk is just $3.65 per contract. Minimum is one contract, so you're risking $365. But then what we would do is we would sell the weekly. So we'd go out to November 12th, and we'd sell the 77 call. And the reason why we choose the 77 call, it's based on the delta, the expected move. So the expected move in eBay for that week is $2.32. So we're going to go right around that expected move, because what we want it to do is move up, but stop. But if it stays the same or goes down a little bit, we're fine. So we would collect 60 cents for selling that 77 call for November 12th. Okay. That lowers our cost basis to $3. So now instead of 365, we're just risking 3. But here's the interesting part. If we could average around 60 cents a week, and we're going to January 21st, so that would be for at least 10 weeks, we could collect $6 in premium, and our cost of the long call is just $3.60. So you could make almost 100% on your money just through premium collection, even if the stock doesn't move. And now your next question is going to be, well, how do we lose? Right? That's what I want to know. Like, how does this go wrong?
Yeah.
And so if eBay goes up, this is a scenario that usually happens where people get a little frustrated. If eBay goes up 20 points, you're capped out because you capped off your upside by selling the 77 call. You're still making a profit, just a small profit. The ideal move is it kind of just stays within a 2-3 point range, which is what stocks do 68% of the time. And they stay in consolidation. They move within one standard deviation of where they're trading. If eBay gets knocked out and drops 20 points, you still collect that 60 cents on the call you sold, but now it's going to be harder to collect premium. You have to go a little bit lower, closer to the strike. So it'll probably end up being a losing trade. But even so, in that scenario, maybe you'll lose $150. But there's many times where you use this strategy where along the way, your cost basis becomes zero and your profits are infinitesimal. So it is my absolute favorite strategy. But even now, when people are listening, 95% of people are not going to fully get what I just said, hearing this only without seeing visuals and without actually experiencing it. So the reason why more people don't do it is just because there's a couple extra steps, which is interesting. But sometimes those extra steps, like I was just talking to you before the call, right? And you're looking into trusts and you're looking at ways to kind of protect yourself from exorbitant taxes. Mm-hmm. The steps you're going to take can save you a lot of money, but they're steps that most people don't take the time to take. Am I right?
Mm-hmm. Yeah, very true.
So it's the same thing with this option strategy. Why don't more people do it? Because you got to put in the work. You got to learn the strategy. You got to exercise it. And when you do all those things, you get rewarded, but most people don't.
Yeah. We've seen such things before. A lot of things are out there, easy to do, and yet nobody does them, right?
100%. And trading, they make it even worse. Well, I don't know, even worse. I'll say it's both. But to collect premium, to become a seller of options, a writer of options, you need level 3 approval. Now, if you ask some of the biggest heavyweights in the industry, is level 3, do they require that approval to protect the individual investor? No, it's just a hurdle for people to go through. Collecting premium is a safer way to trade. Sure, selling calls naked, that's risky. But when you're hedging your trades and collecting premium, it's a defensive strategy. So the fact that you need extra levels of approval to do it doesn't even make sense. It should be encouraged that anyone who's trading knows how to do it. I'm a big advocate that level 3 approval, like they make it so that you have to answer these questions and kind of certify that you know a certain amount to be able to do it, but it prevents more people from doing it, and they should be doing it because it's a safer way to trade.
All right. Well, I guess you teach people how to do this. How hard is this to learn here?
The people who do it with me forever. Like my retention rate on this strategy is over 90%, but my conversion rate is less than 30%. So if I go on a call with 1,000 people, less than 300 are going to sign up simply because it's complex. But of the people that sign up, if it's 300 that sign up, 270 will stay with me for years doing this. So once you're in, you're not leaving, but you got to have the commitment to get in.
All right. Interesting. So people want to find out more about this. Where do they track you down? How do they connect with you?
I mean, I have a great coverage team. So literally, if they emailed me, adam@adammesh.com, and said your name in the subject line, they would get a response right away, or they could go to wealthpop.com and join my newsletter for free.
All right. Excellent. And there's a link to that in the show notes on Financial Survival Network. You got a question for Adam, just shoot me an email to kl@kerrylutz.com. Sounds like a really interesting strategy, low risk, which we like, and decent return, which we also like. Adam, appreciate you coming on. We'll talk to you again soon.
Thanks, Kerry. I appreciate it.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.